XLM to $3? Why Stellar's institutional comeback is about to shock everyone. XLM is waking up. And not just in price action, but in purpose, in momentum, and in institutional alignment. After what felt like an eternity of sideways movement, Stellar just fired a warning shot across the entire crypto market. It cracked through resistance levels that have held since the 2021 bull cycle, igniting fresh momentum, and now, analysts aren't just predicting a recovery, they're calling for a full-blown breakout to $2 or even $3. But here's the wild part. That move? It hasn't even really started yet. Because this isn't about hype. It's not another meme-fueled pump or fleeting DeFi narrative. This is the quiet part of the cycle where foundations are laid, where those who are paying attention spot the shift before it hits the front page of CoinDesk. Behind the scenes, Stellar has been doing something almost no other blockchain can claim, building an ecosystem that's actually designed for institutions. Not for yield-chasing degens. Not for Ponzi tokens. But for real-world business, compliant, scalable, and fully interoperable with global finance. While retail traders are still distracted by Ethereum gas spikes or the latest Solana congestion issue, big money is making a different move entirely. They're not looking for the loudest blockchain. They're looking for the right one. The one that fits into banking systems. The one that speaks ISO 20022. The one that lets them tokenize real-world assets without stepping outside regulatory guardrails. And Stellar fits that bill perfectly. From deep integrations with MoneyGram, to the explosive growth of Palago Labs, to Soroban's smart contracts finally delivering predictable, enterprise-grade programmability, this isn't just another blockchain narrative. This is a blueprint for regulated finance in the digital age. So if you've been sleeping on XM, this is your final wake-up call. The accumulation phase is almost over. The breakout is brewing. And when the next leg up hits, it's going to leave a lot of people asking, how did I miss that? Don't be one of them. Smash that subscribe button right now so you never miss what's coming next. We're diving deep into the biggest underdog comeback in crypto. XLM's silent surge, what you missed in the charts. Most retail traders are sleepwalking through this market. They scroll past XM, dismissing it because it's not trending on Twitter. It's not pumping like Pepe. It's not doing 100x in a day like some random meme token. So they assume it's dead. But that's the trap. Because if you actually open the charts, if you zoom out and study what's really happening under the surface, XM isn't just alive. It's coiling for a massive breakout. And it's doing it quietly, stealthily, with the kind of precision that only experienced market structures produce. Let's talk technicals. Over the past few weeks, Stellar has been testing the 68 cents resistance level, a level we haven't seen since early 2022. That's not just some random number. That's a long-term horizontal ceiling that's been acting like a lid on price action for over 2 years. And right now, that ceiling is cracking. Zoom out to the weekly chart and it becomes obvious. We're staring at one of the cleanest falling wedge formations in the entire altcoin market, multi-year structure, consistent lower highs and lower lows, tightening range, and it's finally breaking to the upside. This is textbook breakout behavior. And it's not just us noticing. Even eGrag Crypto, one of the sharpest chart analysts in the game, has called this move out. His prediction? If XLM can flip 68 cents from resistance into confirmed support, the next leg could take us straight to $1.29. No fluff, no hopium, just pure technical confluence. Why $1.29? Because that level aligns perfectly with historical Fibonacci extension zones from Stellar's last major bull cycle. The same tools institutional algo traders use to map profit zones. The same signals that triggered major rallies in 2017, 2020, and 2021. But this is where it gets really interesting. Because price action? That's just the symptom. The real cause, the force behind this breakout, isn't retail hype or Reddit-fueled speculation. It's something much deeper. We're witnessing a fundamental shift in how institutions view blockchain infrastructure. And Stellar is sitting dead center in that paradigm shift. See, institutions aren't looking for the next hype coin. They're looking for compliance first, interoperable, stable networks that can plug directly into traditional finance systems. They don't care about NFTs of cartoon monkeys. They care about real-world asset tokenization, on-chain forex liquidity, and regulated cross-border payments. And Stellar, thanks to its ISO 20022 readiness, its deep integration with MoneyGram, and the upcoming Soroban smart contracts that bring composability without compromising compliance, Stellar is perfectly positioned to capture that institutional demand. So while the average retail investor is still chasing pump and dumps, smart money is already rotating into ecosystems like Stellar that are built to survive and designed to scale with regulation in mind. This move on the chart? It's not just a price pump. It's a signal. A signal that XM isn't just a legacy token from the last cycle. It's a sleeping giant that's beginning to stretch, move, and roar. You're not too late yet, but the window is closing. Institutional partnerships no one's talking about. Everyone in crypto talks about adoption. But here's the truth. Most of it is just marketing. Flashy press releases. Vanity metrics. Blockchains spinning up the next DeFi casino and calling it innovation. But real adoption? The kind that integrates with billion-dollar institutions, global finance rails, and government-backed systems? That's rare. And that's where Stellar is quietly pulling ahead of the pack. While most layer ones are busy chasing hype, Stellar has spent the last 2 years laser-focused on one goal: becoming the default blockchain for regulated finance. Not just another smart contract chain, but the smart contract platform that TradFi players can actually use. And the first major move in that direction? Palago Labs. This is Stellar's institutional arm, and it's a game changer. Palago isn't building meme coins or launching farm and dump protocols. They're tackling one of the most boring, but also most lucrative, sectors in all of finance: trade finance. Let that sink in. Trade finance is a $5 trillion market. Yes, trillion with a T. We're talking about invoices, receivables, and supply chain credit, stuff that fuels global commerce. But it's also a sector bogged down by paper trails, 90-day settlement cycles, and regulatory friction that slows everything to a crawl. Palago Labs is changing that on-chain. Right now. Using Soroban smart contracts, Palago lets global businesses tokenize their invoices, turning them into liquid, programmable digital assets. Imagine a logistics company in Singapore shipping $10 million worth of goods to a distributor in Germany. Instead of waiting weeks for the invoice to clear, they tokenize it on Stellar, submit it to institutional lenders on-chain, get liquidity in real time, and settle payment in minutes. No middlemen. No paper. No delays. Fully compliant. Fully automated. That is the kind of use case crypto was supposed to unlock. And Stellar is actually delivering it. But here's the thing, that's just one piece of the puzzle. Stellar has also been grinding in the background with central banks, remittance networks, and FX corridors that touch hundreds of millions of users. Everyone talks about crypto adoption in theory. Stellar is doing it in practice. Case in point, MoneyGram. Thanks to Stellar's integration, users across over 180 countries can now walk into a MoneyGram location and move between fiat and USDC instantly. We're talking real-world crypto ramps built into the existing financial infrastructure. This isn't about buying coffee with Bitcoin. This is about the kind of adoption that scales globally today. And it gets even more serious. Behind the scenes, Stellar is working with government entities and policy groups to shape how compliant blockchain finance will work in the next decade. They're not just trying to avoid regulation, they're designing the system with regulators in mind. That's why Stellar's ISO 20022 compatibility matters. That's why their developer stack now includes KYC tooling, automated compliance flags, and institutional-grade security primitives. And now, with Soroban Live, we're entering the next evolution of this ecosystem. Programmable finance. Smart contracts that let banks, fintechs, and governments issue, manage, and settle assets automatically. That's where the industry is headed, and Stellar is already there. Let's break it down. While Ethereum is dealing with gas spikes and memecoins. While Solana is still struggling with uptime during high-volume events. While newer chains are trying to look institutional, Stellar is already being used by actual institutions. That's not hype. That's not speculation. That's adoption, measured in compliance frameworks, API integrations, and real-world business flows. Bottom line, while most chains are building tools for traders, Stellar is building infrastructure. For banks, for governments, for remittance networks, for actual financial systems. This is what the next phase of crypto looks like. And Stellar isn't chasing the future, it's engineering it. Soroban smart contracts are quietly beating Ethereum. Everyone in crypto loves to say, Ethereum is the king of smart contracts. And for a while, that was true. It had the first mover advantage, the developer mind share, the DeFi summer. But here's what no one's willing to admit. Ethereum is becoming unusable for real businesses. Ask any serious dev building for enterprises, and you'll hear the same complaints: unpredictable gas fees, fragmented layer 2 ecosystems, MEV manipulation, latency, inconsistency, compliance nightmares. Ethereum is no longer a place for building business infrastructure. It's become a speculative playground for deegans and whales. Now zoom out. Because while everyone's watching Ethereum try to duct tape its problems with rollups, Stellar quietly dropped something that changes everything: Soroban. And here's the truth. Soroban isn't just catching up to Ethereum, it's leapfrogging it. Built from the ground up in Rust and compiled to WebAssembly, WSM, Soroban is not your typical smart contract engine. It's fast. It's safe. It's predictable. Every single interaction is metered in a transparent way, meaning developers and businesses know exactly how much it's going to cost to execute a contract. No surprise gas wars. No random $80 Uniswap swaps. No mental gymnastics trying to estimate fees during peak network congestion. That alone is huge. But what really sets Soroban apart? Compliance-first architecture. This is where Ethereum can't even compete. Soroban allows developers to integrate identity, KYC flags, risk scoring, and regulatory hooks directly into contract logic, without compromising decentralization. We're talking smart contracts that are ready for institutions, out of the box. That's the golden ticket. Because in this next phase of crypto, regulatory clarity is the moat. The chains that can prove compliance while still offering programmability? Those are the ones that will attract the real money. The pension funds, the fintech platforms, the central banks, the world banks. And Soroban is designed specifically for that. Need proof? Just look at the data. Since Soroban launched, developer activity on Stellar has exploded. According to the Stellar Development Foundation, the number of deployed contracts is now doubling month over month. Wallet interactions are hitting all-time highs. Ecosystem grants are flying out the door. And early applications built on Soroban aren't clones of DeFi casinos, they're built for real-world use. Tokenized invoices, compliant lending, identity-verified asset issuance, cross-border payroll, and more. Meanwhile, Ethereum is still trying to solve basic infrastructure problems, like how to prevent bots from front-running trades. And that's the point. Stellar isn't competing for the same audience. Soroban isn't trying to win over the deegan crowd. It's not about NFTs or meme coins or leveraged staking loops. It's about institutions. It's about real-world finance. And it's about building a foundation that governments and corporations can actually use without legal headaches. Soroban is optimized for business, not hype. And that's exactly why analysts are starting to project massive upside for XLM. The $3 prediction, is it real or just hype? Let's talk numbers. Because crypto Twitter is buzzing with a bold claim, XLM to $3. At first glance, that might sound crazy. But when you peel back the fundamentals, it starts to look not just possible, but actually plausible. The call came from Egrag Crypto, a veteran analyst known for his accurate, technical deep dives. He didn't just throw the number out randomly. He backed it up with multi-cycle Fibonacci extensions, macro breakouts, and market cap comparisons that put XLM's trajectory into serious perspective. Let's break it down. If XLM hits $3, we're looking at a market cap in the $80 to $90 billion range. Sounds like a lot, Until you remember that XRP hit that exact level back in 2018 during a far less mature bull cycle. And Ethereum? It cleared $500 billion in 2021. So from a total valuation standpoint, $3 for XM doesn't even put it in the top 3. Now factor in supply. XLM has a hard cap of 50 billion tokens, with over 27 billion already circulating. No mining, no inflation, no surprise emissions from staking unlocks or shady token reserves. The Stellar Development Foundation, SDF, holds most of the rest, and it's locked for ecosystem development, not dumping on the market. So what we've got here is a deflationary model with increasing demand pressure, especially if XM becomes the asset used to power institutional smart contracts via Soroban. Here's the kicker. Every Soroban contract interaction burns a small amount of XM. Every cross-border payment, every tokenized invoice, every smart contract call from a government-backed stablecoin. It all burns fees. And that burn rate adds up. If Stellar becomes the backbone for even 1% of global trade finance, a $5 trillion industry, that would mean trillions in annual throughput, with a portion of that flowing through Soroban and burning XM. That's Ethereum's EIP 1559 model, but better. Because instead of burning fees from speculative swaps and NFT mints, Stellar would be burning XLM based on real-world utility. You want a sustainable crypto economy? That's how you build one. Bottom line, the $3 target might sound high, but it's actually a conservative projection if Stellar keeps growing on its current trajectory. Especially when you consider Stellar's integration with MoneyGram, 180-plus countries. Its ISO 20022 readiness for interbank settlements. The rise of Palago Labs in tokenizing real-world invoices. Soroban's compatibility with enterprise-grade compliance. And the fact that no one else in crypto is even close to replicating that stack. So yeah, it might not be hype after all. So is $3 crazy? Or is it actually conservative? Security, speed, and stability. Why institutions are choosing XLM. Security is the final piece of the puzzle. And Stellar just leveled up in a big way. The network recently integrated Blockade, a security platform focused on smart contract safety, phishing protection, and threat intelligence. That means users interacting with Soroban contracts will get front-end protection, suspicious transaction alerts, and wallet-level scanning. All built natively into the Stellar experience. Why does this matter? Because institutional players won't touch a blockchain unless it meets strict security standards. They need guarantees, not vibes. Stellar is already ISO 20022 compliant, which means its data structures align with international banking standards. That alone makes it easier for banks to integrate with Stellar than with most other L1s. Add on-chain identity, low latency, and military-grade security features, and you've got a chain built for serious money. We're not talking about NFT monkeys or meme coins. We're talking about sovereign currencies, tokenized assets, and billions in trade finance. And with new stablecoin integrations being tested, yes, even USDC and URC, Stellar is positioning itself as the liquidity layer for regulated digital finance. Why you don't want to miss this wave? The crypto spotlight may be elsewhere, but the smart money is watching XM. As the world wakes up to real-world blockchain use cases, Stellar is no longer the underdog. It's the blueprint. From Palago Labs to Soroban, from enterprise-grade security to a $3 target that actually makes sense, everything is aligning for XM. The breakout is happening. The institutions are coming. And if history repeats, those who positioned early will win big. Don't be the person who says, I almost bought XM at 12 cents. Be the one who saw the shift before the headlines. Subscribe to Be Crypto Smart for more deep dives, real analysis, and the truth about where the smart money is going in crypto. Your next big crypto win might just be one Stellar decision away.